And good morning once again, options traders. Well, every once in a while we do some videos on technical analysis, whether they are in overlays, lower studies, moving averages, and every once in a while we do candlesticks. And that's what we're going to do today. We're going to talk about a particular candlestick that is called a Marubozu. What is it and what does it signal? Well, before we get started, as always, please be sure to click like and subscribe. Definitely very much appreciated and helps so much in promoting the channel. So a Marubozu candle, what is it? Well, it translates from Japanese into something like a shaved candle. And that just simply means that there is little to no shadow on one end of the candlestick or the body, or on both ends. Might be completely shaved. And regardless of which end happens to be shaved, it shows a strong directional move. That's really the important insight. So to understand how a candlestick is formed, let's take a look at that first, and then we'll see what makes it a Marubozu. So let's say that this is our stock chart, and we have a stock price of 100 right here, and this is our opening price. And by the end of the session, we have a closing price of 98, so that would be our close right there. Now, if the markets are currently open, then this would actually be the current price, if that's where the stock price was. But if the markets are closed, we're just looking at the opening and closing prices, and we just simply form a box around them. Now in this case, because the close is below the open, the candlestick or the body would be red. Now we'll also have a high and a low during the day. Let's say that the high was up here at 101. We just simply trace a line up to the highest point, lines up right there at 101. And if the low, let's say, is down here at 97, we trace a line all the way down here so that it lines up at 97, and that's our low. Now, these little lines that we just drew that show the highs and lows are actually called shadows. A lot of times you're hearing people today calling them wicks, which seems to make a lot more sense if these are candlesticks, but they're technically called shadows. This red portion right here, the rectangular body, is called the body or the stick. So notice that we have the closing price below the open. Again, that's why the candlestick is red. What would happen if the open and close were actually reversed? What if the opening trade was down here at 98 and the close was at 100? Same idea, but now because the close is above the open, we get a green candle. The high and the low still have the same connotations. They will just simply be your high and low for the day. So now that you understand how a candlestick is formed, what is a Marubozu? Well, a Marubozu simply does not have these shadows extending out from it, so a perfect textbook Marubozu is going to look like that. So remember, for a green candle, the top would be the close, the bottom would be the open. Close is above the open, that's why the candle is green. For the red, it's the opposite. This would be the open at the top, this would be the close. The close is below the open, and that's what's making it red. But the idea to see is that once the market opened, it never traded lower. It just continued to trade higher and higher throughout the day, and it actually closed at the highest trade. See, if it traded higher through the day, we'd get this upper shadow, and then we might retrace down this way to the close. But that never happened. Just shows an incredibly strong rally throughout the day. The opposite is true for the red candle. We opened up here at this price, and throughout the day, it was tremendous selling pressure right into the close. If we had traded lower, we would have gotten this lower shadow and then maybe retraced this way. Same thing for the upper side. If we opened at this price, but we traded higher at some time during the day, we would have seen an upper shadow. But we didn't. It just opened and just basically shot straight down right into the closing bell. So whether it's a shaved candle that's green or red, it just shows a lot of conviction by traders. Now, I also mentioned that a Marubozu, a perfect Marubozu, would look just like this, no shadows at all. But in the real world, if we happen to get these little tiny nubs that might stick out like this, it's still considered a Marubozu, certainly close enough. But the idea is that it just shows tremendous buying pressure throughout the day or tremendous selling pressure. So that is a perfect Marubozu when we have it shaved, or at least nearly shaved, on both ends of the candle. Now, what if we get something like this, where we have it shaved just on one end? In these cases, this would be an opening Marubozu. Remember, for the green candle, the open is on the bottom, closes at the top, so it was the opening side of the candle that was the shaved portion. We opened at this price, never traded lower, otherwise we would have had this lower shadow. Shot straight up throughout the day, did trade higher at some point, and then we retreated a little bit down to here. But still, overall, tremendous buying pressure. Now, what about for the red candle? Top of the candle is the opening trade. We opened at this price, never traded higher. If we did, we would have had an upper shadow. So once we opened, we essentially just traded lower throughout the day. We did hit a lower low at some time through the day. We don't know when this was without looking at an intraday chart, but at some time we did hit a lower low, and then we retraced back up to this closing price. So that would be our close. So that's why these would be opening Marubozu candles. It is simply the opening side of the candle that was shaved. Now, of course, we could have a closing Marubozu, just the opposite. For the green candle, this is our close at the top, this is our open. So we opened at this price. At some time during the day, we did trade lower, but we did eventually come back and we closed at the high right into the closing bell. So lots of buying pressure going into the close. For the red candle, this is our open, this is our close at the bottom. So what does that tell you? Yes, we opened at this price, but throughout the day, at some point, we did trade a little bit higher, but then we went into a really big sell-off and closed right at the low. So again, this would just show tremendous selling pressure. So these are closing Marubozus, and that's because the closing end of the candle is the part that is shaved. So now that you know what a Marubozu is and an opening and a closing Marubozu, let's jump over to the E-Trade platform and take a look at some actual examples. All right, so now we're into the E-Trade platform. We're looking at the S&P 500 or the SPY. So this was Friday, August 12th, 2022, and pretty much a closing Marubozu. Now, if you look really closely, might be hard to see in the video, but there's a tiny little shadow up here on the upper end. But remember, this side of the candle for a green candle is the close. So we opened up down here at this price, did trade a little bit lower, but throughout the day rallied really strong right into the closing bell. Shows tremendous conviction. So that gives you some good insights about the temperament of the bulls on that day. Let's come back over to this one. Right here you can see that it's shaved off the bottom. It's a green candle. So this is the open. Now we didn't close at the high, but we never went below the opening trade. So this is also very bullish. Just shows that right off the opening bell, we did trade higher at some point, pulled back a little bit, but for the most part, a lot of buying pressure. Now also, as you've heard me talk about with the major moving averages, here we've got the 100 and 500 pair. Even if it was just one of these moving averages, wouldn't matter. It's a Marubozu candle right on one of the major moving averages. So that's another thing that could give you some good insights that this is a very bullish setup. So Marubozu candles are quite common. If you come back over here, you can see this is another Marubozu close. We opened up at this price, traded lower throughout the day at some point, but closed right in there into the high. Again, showing that it's a very bullish setup. Now here's a great example of almost a perfect Marubozu. You can see there's a little tiny shadow at the bottom. This is our opening down here. Here's our close. Definitely closed right into the high. So another big, very strong bullish day. So those are just some of the basics of being able to identify a Marubozu candle, Marubozu openings or closing. And it should also help you to understand the interpretation on those days. And also remember that if these ever occur right on a major moving average, it just makes it that much more significant. And so for anyone who'd like to learn more about the art and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a technical analysis course. You can find it all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.